capital investment. You buy equipment, you buy assets, and you have also, you put in some money for working capital. So both for OPEX and CAPEX, yes? That's the first set of cash flows. The second set of cash flows is the up 5 or 10 years. So it depends on the business. Most of what we're going to do is going to be 3 to 5 years in this class, but you can extend it, up or down. So projects, capital budgets are approved on the basis of how much money they're going to make for the company. Money meaning what? Cash. Okay, when I say money, I mean cash. Sometimes they're approved because they're strategic. But by and large, it's going to be because of how much cash they make for the company, and they do that with capital budgeting. So let's analyze cash flows. And to analyze cash flows, we need to do time value of money, rating cash flows. So once you put in the money, once you put in the investments, you get the business itself going, operating, and hopefully it's going to generate, it is going to generate cash flows. Hopefully it's going to be positive. So we're going to have a set of cash flows for the duration of the project. Notice that I'm going to talk about projects. Everything is going to be a project. It's going to have a beginning, it's going to have an operating middle, and it's going to have an end. Okay? So notice how I'm going to use this for many things. And then the end is what's called the terminal cash flow. So imagine that in the end you shut it down, or you sell it, or you transfer it. What are you left with? That is the terminal cash flow. And like I said, we're going to go into all of these things later. But of course, the most important thing is what? The net cash flow. And this is what we're going to focus on today. So assume that we're going to have a capital budget that generates a net cash flow, a series of cash flows over the years. How do you analyze that? Or rather, how do investors analyze that? How does the CFO analyze that? Yes, that's what we're going to focus on today. And just to recap, businesses need to do long-term investments. When we talk about capital budgets, we're talking about 1+ year. It could be 1 year, it could be 3 years. In some cases, if you're Intel, you may need to do 10 years when you build a fab.